Hi everyone, just a short video today talking about some great news that came out today that reflects in the stock price. So it's great for the Lemonade shareholders like me. Lemonade stock up 5% today, up a further 1.5% post-market. And it's because Lemonade is now entering the car insurance business finally. It's been long awaited and they're finally entering the car insurance business. For those who don't know, Lemonade is a disruptor in the insurance industry. They try and use machine learning and AI to create a better insurance product. They use reinsurance, so they farm out the insurance basically to other companies, and they have really fast claims. It's a very streamlined service, very young people focused, and young people are traditionally the biggest users, and it's a big disruptor in the insurance industry and has a lot of room to grow. And the insurance industry is dominated by a lot of big old world names, and Lemonade's really fighting to disrupt an industry that's desperately in need of disruption. Anyone who's ever had a car insurance claim, or any insurance claim for that matter, it really is a pain, and Lemonade is trying to streamline that in the best way possible. And as you can see from the paragraph on screen, they currently offer renters, homeowners, pet, car and life insurance, and the car came out today. It's all powered by artificial intelligence, and they're trying to do some social good with it. They're a certified B Corp, gives its unused premiums to non-profits. And currently, most of the revenue comes from renters insurance, which is about a $4 billion a year market. Auto insurance is a $300 billion a year market in North America alone, which shows why the stock is up a decent amount today and shows the potential for this company. Is that, so as you can see, renters insurance, about 56% of the total in-force premiums for the company. Homeowners insurance about 30%, pet 13%, life 1%. They're really trying to get into the more lucrative markets. A renter's insurance typical premiums are like $15 a month. Car insurance premiums can be, we're talking like $1,000 over the course of a year on average. Homeowners insurance, again, not a particularly lucrative business. And homeowners insurance is in fact probably the one that's most hurtful to Lemonade this year because of the Texas freeze and things like that. Pet insurance is a burgeoning industry. They've not long into that. And life insurance, it was the newest segment before car. Life insurance is a huge market, over $1 trillion worldwide, and about, I think it's something like $600 million market in America. $600 billion dollar market in America. This is something that Lemonade quickly needs to expand into, and they're showing signs of life, which is great. Just looking at this graph, this is the latest data we have from Lemonade, Q3 results releasing, I think, November the 8th. So this is from Q2 financial report. Gross premiums up 90% year over year, in-force premium up 91% year over year. $300 million in-force premium may seem like a lot, it really isn't for this industry. We're talking the big boys will have in the hundreds of billions in-force premiums. Premium per customer, 29% up, strong, and 48% up on customers. So as I said, they've reached the millionth customer earlier this year. They're now at 1.2. They're expanding rapidly in other countries. They recently started in France. They're moving into major European economies like Germany. These are all great signs for a growing company. The speed of growth for Lemonade is frightening. Don't get me wrong, they are taking losses on board. Like, this is not a profitable company at the minute, but this is obvious. This is to be expected. Lemonade needs to grow as fast as possible. It's trying to disrupt the insurance industry, so it needs to get its name out there, prove that it's working, and crucially, improve its AI over time. It's a machine learning algorithm of some sort, and it improves over time. They're trying to get the gross loss ratio down over time. This year, I think it was up from 67% to 74% because of some one-off events. This happens in the insurance industry. Anything below 70 is considered strong. Let's hope it can continue to get that down. So I think outside of the pure financials, one of the better reasons to invest is Lemonade's Lemonade Give Back program. It's a certified B Corp. It tries to give away a percentage of its unused premiums to chosen charities. It does carbon offsetting with its car insurance, or it's promised to do that. It's just generally a responsible company. I think, this is not necessarily a reason to invest, but it certainly makes me feel better about investing in Lemonade, being a shareholder. And it's a company that you can easily get behind. Like, this is a company doing responsible things I think this is the way a lot of new IPO companies and newly minted companies. This is the way the world is moving. It's important to be a responsible company, and more important, it's important outwardly that people see you as responsible and see you as an ethical company, because the world is changing. Like oil and gas companies really struggling valuation wise because major funds are not buying them. Cigarette companies, that major funds are not buying them because they're not ethical investments. Now, I'm not saying these are bad companies by all means. There are certain companies that I own, like Lockheed Martin, for example, that certain people may not think are completely ethical. That's fine. I don't believe that ethically investing is a way to create outsized returns in the long term. I just feel better owning Lemonade, knowing it's doing good things. And I think this is definitely a benefit when considering from the customer's perspective. If you know that a certain amount of your unused premiums are going to charity, I think that's probably going to make most people more likely to go with Lemonade, even if it's a slightly higher cost. I think Lemonade traditionally has been very competitive on cost from the customer's perspective. Let's see if it can do that on auto insurance. I don't know yet. I like to think that it'll give it a go and compete with the big boys, and try and disrupt some market share, because that's what it really needs to be doing. It needs to be landing and expanding. It's like, I admire the strategy with rent insurance. Rent insurance is typically for young people. So, people in the 20s to 30s are probably the majority of renters. And if you can get people early on, then they can graduate to homeowners insurance, they can get auto insurance. If you can keep people happy with Lemonade, then they can get other products from you in a similar way as any sales company tries to do. So looking at the yearly chart, it's pretty much at 52-week lows. 52-week lows 55. It's up a bit from that, 72 today. The 52-week high is 188. That was a bit of a mad moment at the end of 2020. I actually sold at this point around 170, and then bought back in around something like $80. I just thought the valuation got a bit nuts. This is a company that, as of right now, trades on a price to sales above 40. This is this comes with inherent risk. If there's a pullback, if the interest rates increase, this stock could be a bit of a turkey in your portfolio. This is definitely not a stock that is going to do amazing things certainly in a year. I think this is a stock to hold for the long term, 5, 10 years, even more. This is not going to be an easy journey. They're trying to disrupt huge players in this industry. As an industry ripe for disruption, don't get me wrong, but there's a big path ahead of it. And this is not for the faint of heart. I think this is at the very least a 5-year hold, and if you're not prepared to do that, then maybe Lemonade isn't the company for you. But I'm a happy shareholder, and this is only encouraging me to buy more shares. I think this is really promising. Thank you. I'd like it if you could like and subscribe. Thanks.